What's going on, guys? Hope you've all been well. In this video I wanted to show you the best way to catch reversals, which would be a bit easier to understand now because of the first video that I did, which explained how to understand market direction. So I'll be going through how you could have caught this trade from right here at the top and then written it down for some pretty good risk to reward. Also, I have a free Telegram channel where I post all my trades. I take live and breakdowns, so you can join that from the link in the description. So when we're catching reversals, what makes it high probability is that we're in line with the higher time frame. So we'll do a top-down analysis. Basically, we're catching, it's just coming up for a retracement, and then we're catching it to go back down. That's what makes it high probability. So I'll start my analysis from the weekly time frame. So what do I look for? I look for the structure, which is bearish. We can see it just keeps breaking lows and going lower just by looking at it. I also look for points of interest. So I see here we have a fair value gap that was closed, and we have an order block here that was tapped into. And if you see what happens each time we tap into the fair value gaps and we close them, price moves down. Again, closes it entirely here, moves down, closes it entirely again, and moves down. So it's basically doing the same here. So that gives me confluence that this will move down. So what I'll do, I'll grab it from here and I'll put it onto the order block, and then I'll wait to see the reaction that occurs there. So going to the daily time frame now. So I'm looking for a lower time frame break in structure. I'm looking at a 1 minute because this is a weekly level. I want to see a 15-minute trading range be created. So what you could even do here, not that you need to refine this area, but if you wanted to, what you could do, look at which candle has the most volume. So what I mean by that is which candle has the biggest body. So it will be between these two. So if I just go a bit closer on that, this is about 18 pips roughly, and then this body here is almost 20 pips. So if I refine it, I'd push it to there. Okay, but you don't really have to, but that's just let's say a little gem that I'm dropping in here, that how you can refine your entries. So now I'll go on a 15-minute time frame and I'll wait for two things to line up, time and price. So I want it to be in the London session, so the ICT kill zone, which is 2 a.m. New York to 5 a.m. New York time. So let's go back to here. Okay. As you can see here, we had a break in structure, but it was only wicks that broke here. For me, the way I view market structure, I want to see a body break below a swing low. That's why it came back up here, and it also tapped into the body of that order block that we had back there on the daily time frame. So now we have, it took out this liquidity and it broke a swing low over here. So a swing low is when the wick is in the middle is lower than to either side of it. So that's a swing low, and we had a body break there. So now I know we're bearish, and then what will confirm the trading range is when we break in the opposite direction. So I'll mark out the ICT London kill zone. So 2 a.m. to 5 a.m. That's the window I'm looking for my trades in. So right here we have the break in the opposite direction. So I'll have my trading range from this high to this low, and then I can draw out premium and discount. I'll make that a little bit neater by putting a line there to show us where 50% is. So now I know that this area, anywhere in the 50% from here to the 50% line, that's premium, and I want to be selling in this area, taking short positions. So now what we can do, we can actually buy up to, so the Asian high and Asian low, which is this box here, so the Asian session highs and lows, that is where liquidity will rest and price will likely draw towards and take out. So over here we had a protected or strong low being made. So we had it sweep liquidity, break structure. So now what I like to do is look on the 1 minute and see if there's an entry opportunity in here. So once we get here on the 1 minute, we have a similar, I'm just going to tidy this up, sorry, 1 sec. Okay, we have a similar scenario happen. It's a trading range. So price is fractal, meaning that this trading ranges and everything that happens on one time frame happens on all of them. So we had a sweep of liquidity, we had a major break of the 15-minute high, and then we had a break in the opposite direction here. So our trading range on the 1 minute is from this low to this high. And then if we take our premium discount tool, anything under here, so this is discount, we will look to buy. So what I would look for my entry is these lows all have liquidity under it. I can see there's a nice gap here and an order block. So what I'll want to do, I'll take my entry off this, and my safe target when I'm looking to buy can be the high of that trading range, so right here. But because I'm expecting the Asian highs to be taken out, I would target this area. So we let that play out a bit. Let's see how it goes. Okay, oops. So see right here how price didn't touch the point of interest. It literally just stopped right before it. That is showing you that they're inducing more people into this. So this is extra liquidity built up before the point of interest, which makes this high probability. And now because there's no liquidity left in this trading range, you expect more explosive price movement up. So we get a little bit of consolidation, and then we get an explosive move up, taking out the Asian highs. Okay, so that's actually our buy, that where you're just getting, you know, a little extra bit of money catching that buy before you're catching the reversal. So that's 11R, or it was 6R here. Both, I mean, if you closed it all here for 6R, it's more than enough. So we took out price, we took out the high, and then we got a break in structure here. Also, if you look at the 15-minute time frame, this was the last high before here, which means this is the last bit of liquidity within the trading range from the red dot to red dot. So now you can expect price to go lower. So this is how you could have caught the reversal here, because there's no reason for it to go up any further. You've had the 15-minute break in structure, and you've had it tap into the weekly and daily point of interest. So now it's ending the daily retracement and going back down. So I would look for the trade. Again, same concepts apply. So we had a break in structure, and now I would look to take my entry at the 50% or above. I'd actually probably take my entry from here, but what happened on this day, price didn't come there and it just dropped. So if you had an idea that, you know, this was the top and you wanted to go down, you could have just caught it from this order block here, and then now you know your targets are going to be really far down. Why is that? Because you went off a weekly and daily point of interest. So if we go to, let's say, a 15-minute time frame, where could we target? I would be targeting here for 2 reasons. So if I draw that down to here, 2 reasons I'm targeting that is it's an unswept Asian low, and we have these lows that are relative equal lows, which means there's a lot of liquidity resting there and price is drawn to there. So you could target that, and then you've got 25R, which is more than enough. I mean, if we didn't get that tighter entry, these are my rules. So I wouldn't break the 50%, not going into it. I just wouldn't take that short. But if you were happy just for a few little pips to just get it there, it would be worth it. So put that back up there, and then let's see if that reaches it today in this session. So price dropped quite heavily, and then okay, a little retracement here, Alright, so we've got the new day. So what I might do another trade so we can see how we could have caught another short down to take out this area. So again, I wait for the London session. That's why I trade, so I'll mark that up. So I can see from 2 a.m. to 5 a.m. I want to take a position. And again, we'll do top-down analysis. So I'll look at this high to this low, 50%. So I can see in the 50% area, we have a fair value gap here. So now price is tapping into that and reacting off it. So now next thing I want to see is a 15-minute break in structure. On the 1 hour, what I see is we've got a high, a low, and a low here that has failed to break a high, meaning this is weak. And now if we get that break, there's more chance that we're going to go lower and take out these areas. So I'll go to the 15-minute time frame. Okay, so we haven't had a break in structure yet, so we'll wait for that patiently. Here we have it. So we have a sweep of liquidity. If I zoom in there, we tapped, I'm going to delete this now, but we've tapped into the fair value gap on the 4 hour, swept liquidity. We broke the low with a body, so that's great. So now I'll wait for a little trading range to be created. We had a sweep of liquidity here as well and a break. Okay, I don't know what happened there. It wasn't updating the timeframes. Alright, so now we've got this. So for this trading range to be created, I need to see a break in the opposite direction. So wait for that, and here we have it. Here we have the break. So now I know that this trading range, so the 5-minute trading range is from here to here, and then I'll look for a point of interest to short in a premium price. So I'm looking for anything in this area. So now you just look for your point of interest. I can see I've got a gap here. So what I'll do, I'll take, most likely, sometimes it depends, I'll take the close or just the 50%. In this case, I can see we've got two lows here that line up with the 50%. So that's when I'll take the 50% and I'll take my trade off this, because we have an order block here, we have the 50%, and I don't expect it to go past this area. Now if it does, so let's say I put my stop loss like this and price just did something like this, it went up and it wicked me out and then went down, that's on me, because if you're going to be safe, you put it above the strong high, because this should not get broken. If it does, then your analysis is wrong. So at least for me, I know that and I take the risk. It's up to you if you want to. Everyone has their own rules. And on this 5-minute time frame, this is a 3.2 pip stop loss. So there's no reason to go to a 1-minute time frame if you're already getting it on the high time frame, a small stop loss. Okay, perfect. It taps into it and then you see the reaction. Super bearish reaction after that. So this could be your first target. The safe target is always the weak low of the range. So that's 8.5R. Next target could be the Asian low for 14R. You could target the 1 hour week low for 26R. Or you could target these unswept Asian lows for 35R. So it's completely up to you how you're holding it, your risk management. See how that played out if it reached it on that day. It's up to you how you want to do your risk management and trade management. So excellent, we did get there. So 35R. I normally don't hold trades for that long, so I would take off maybe some partials here or here, and over here I'd probably collapse my whole position because I'm very happy taking 26R. And I don't like to hold it. It doesn't suit my personality, my psychology, so I don't do it. So you have to decide what you do for yourself. So if we have a look at this, the last 2 days, how we could have ended was we caught 11R here, 25R here, and then 35R here. So what's that? About 40, 50R. So depending on how much you risk, it could be well over 25, 30%, even if you risk 0.5% per trade. And yeah, so I hope you found that useful, and this is how you could catch that daily high, writing that down. You could continue to target lower levels over here. I'm just an intraday trader, so I don't hold it that far, but using these concepts you can. If you found this video useful, please give it a like, subscribe, comment any ideas that you want me to post. I can do a new video on that and help you guys out. So, yep, hope you enjoyed the video, and till next time.